Good afternoon, ladies and gentlemen, and welcome to the Foreign Correspondents Club. Before I go into a brief introduction, if you have your cell phones, if you could just put them on whatever manner mode or turn them off. And so, anyway, today's guest, as you know, is Professor Motoshige Ito. He's a member of the Council of Economic and Fiscal Policy, one of the main advisory groups for the Japanese government. He's also a professor at the Graduate School of Economics at the University of Tokyo. His, I guess, main focus during his academic career was international economics, but as we were talking, he said as you get older, you sort of get drawn into these other areas. And so he's on the main sort of economic policy setting panel for the Japanese government. And today he's going to talk about the current state of the economy. Just recently, I believe a couple days ago, the Japanese government revised up its estimate for growth for the next year, or next fiscal year. And then also, in addition to the current state of the economy, Professor Ito will also talk about the outlook for the so-called third arrow, which people have been waiting for basically for the last, I think, couple of years now. And so anyway, without any further ado, I would like to introduce our guest speaker today, Professor Motoshige Ito.
Oh, thank you very much. It's my pleasure to come back here. So I'm just speaking about 20 minutes and just have set up some of the issues, and then just waiting for your questions. Now, I think it's a very good timing. Actually, I was appointed as a member of the council 2 years ago. And just about 10 days ago, I was just extended. So this is a kind of a turning point for the second stage of the Abenomics. Now, when we are talking about just this year economy, I often talk to my student. This is very important factor is sanyasu. San means 3, and yasu means cheap. So there are 3 very important prices which we have to just focus. One is interest rate, and second is the exchange rate, and the third is oil price. All 3 are very cheap now, and that has a very tremendous implication for the coming Japanese economy. Now, interest rate is very important because this is very much related to the monetary policy of Bank of Japan. When journalists or even politicians is talking about just Bank of Japan monetary policy, they often just look at only immediate influence. For example, when Mr. Kuroda says something, they just look at what is exchange rate, interest rate, and stock price, and so on and so forth. But if you just read the textbook in university, you probably found the word called time lag. There are at least 1 or 2 years time lag for us to just realize the actual influence of the monetary policies. So if I just focus on the interest rate, of course I'm just meaning real interest rate, not nominal interest rate. Now just remember what happened in 2012, just before Mr. Abe became Prime Minister. As you remember, inflation rate is -1%. That was what we call deflations. And nominal interest rate, say 10-year government bond interest rate, is something like 1%, or maybe a little bit higher, 1%. So 1% nominal interest rate and -1% deflation means plus 2% real interest rate. So our interest rate was very high if we just take into account the deflations. Now, what happened now? Well, nominal interest rate, say 10-year government bond is something like 0.3%. Okay, so about 0.7% decrease in nominal interest rate. But the more important thing is inflation rate. If you exclude, even if you exclude the influence of the consumption tax last year, still we have about 1% inflation rate. So 1% plus 1% inflation rate and 0.3 nominal interest means just real interest rate is minus 0.7%. And now Mr. Kuroda, as you know, just promised he's going to achieve the 2% inflation by the end of next March, I mean the March 2016. If that is realized, the real interest rate, if the nominal interest rate is just keep in this level, is something like minus 1.5%. So anyway, we just observed just the real interest rate just dropped from 2% to minus 1%, or maybe minus 1.5%. Now you have to think about what is the implication of this change. And of course, there's a lot of implication. First of all, household sectors, portfolio behavior. You probably know we have a huge amount of saving, or actually accumulated saving, something like 1,600 trillion yen, or maybe 16 trillion US dollars. I mean, for household saving. And quite a large portion of the money is actually held in the form of deposit. The reason is very simple, deflation. When you are just experiencing deflation, that is the most, the common way to hold the asset. But now, if inflation rate is going to be 2% in the near future, and probably even if inflation is 2%, the interest rate on just the ordinary deposit is very low, mean just they are losing a lot of money because of the weakening purchasing power of money. So there's going to be probably very big shift of portfolio money of the Japanese household sector if we just continue this kind of interest rate. And the same thing can be said about corporate behavior. You probably heard a lot about the very defensive behavior of the corporate sector for the last 10 years, not spending a lot on investment. And just when they have some kind of a profit, they try to return their loan. And if they have more money, they just start accumulating money in their pocket. And that is one of the reasons why we have a very weak economy. But when real interest rate is minus 1% or minus 1.5%, if the corporate is continuing that kind of behavior, that is not very, the good way of behaviors, because then you are losing the money by holding money. So I think the manager of a corporation have to think about other way of using money. I can think of at least 4 different type of the way of using money. One is make more investment, of course. The second is just paying more wage for the workers to just provide the profit to the workers. The third is increasing dividend or just return to the stockholders. And the fourth is just having more aggressive fiscal or financial investments such as merger and acquisition and so forth. And I think just very low negative real interest rate is a very important driving force of this kind of behavior. So I'm just watching very carefully whether this kind of a very low negative interest rate will have a kind of the influence on the behavior of the corporation. Now, second cheap price, of course, exchange rate. And you probably know, if you look at the real effective exchange rate, but usually what the economists use, the yen is now the lowest in the last 40 years. The present level of the real effective exchange rate of yen is almost equivalent to what we experienced in 1973. Now, you probably remember yen-dollar exchange rate at that time is 300. It is now only 120. But at the same time, you know, at that time, 40 years ago, most of the currency is just pegged to dollars. So if we looked at the dollar-yen relation, that provides us a basic image of the value of yen. But as you probably know, in the last 40 years, most of the other currencies actually appreciated against the yen, the dollar. So yen-dollar exchange rate is not a good index for us to look at just the value of yen. And naturally, that means just the yen is much weaker than it was shown in yen-dollar exchange rate. And more important thing is price. Japan experienced a very long period of deflations. So for example, if you compare the consumer price change between the United States and Japan from, say, 1995 to, say, 2010, 15 years, about 40% difference. So Japanese prices become 40% cheaper than the US price if you just compare the consumer prices. Which means just if you look at the real exchange rate, yen is really, really cheap. So I often say this is a big bargain sale of Japan, as you probably know. If you come to Japan, it's cheap not only because yen is cheap, but also because for many period deflation just provided you a very cheap price. Similarly, when Japanese company is just exporting abroad, it is cheap not because of the very weak value of yen, but because of the long period of the deflation. We have a very low level of the wage and the other costs. So I think this very big, the very dramatic weak value of yen, whether you like or not, but at least it's a reality. You have to think about what is the implication of this on trade structures and economic activities. And obviously, these are the good side and the bad side. And the bad side, as you probably know, is because of the weak yen, we have to pay more when we import, especially when we import oil and other resources. And then this comes the third cheap one. So it is really, really lucky for Mr. Abe that the oil become very cheap, and that's actually compensating for very difficult part of the weak value yen. Now, good side, of course, export and increasing number of the tourists coming to Japan and other behaviors. And here again, the issue of time lag. Usually, people expect when yen becomes cheaper, we are going to experience the expansion of the export. But in the present world, the situation is much, much complicated because trade is not just production and export. There's a lot of activity of foreign direct investment or just the worldwide operation of the production is involved. Now, what we are now looking very carefully, well, some very famous, the business person mentioned, his company, when they make investment, about 80% of investment is abroad and 20% in Japan 5 years ago, because of the very expensive value of yen. But these companies now rethinking, maybe in a few years, about 50-50 share is going to be going to abroad and domestic. Now, because this kind of behavior depends on what kind of industry you're talking about. A company like Canon was very quick to just, recovering the domestic production. But the company like Toyota or Nissan is much, much slow because they have a lot of commitment of the production abroad. So you have to be very careful for discussion. But anyway, what I want to say is the exchange rate has very important implication. Not immediate implication, but it's more long-term implications. But anyway, so this is the starting point. So I think for the Japanese economy, this is a very good starting point, at least, if you want to look at just increasing demand and increasing economic activities. Now, let me just discuss the macroeconomic side of Japanese economy. One of the very important aspects of the Abenomics is a very dramatic stimulation by the government and by the Bank of Japan. Now, it is very natural when you have a very dramatic stimulation. There's a part of the economy which responds very quickly to that kind of stimulation. And there's a part of the economy which is very slow, which is very slow to adjust. Now, the portion which just responds very quickly, exchange rate, corporate profitabilities, or the stock prices, or even unemployment rate, as you probably know. If you look at these numbers, the performance is just dramatic. Like the Nikkei stock index increased more than 100% in the last 2 years. And unemployment rate just moved from 4.2% in 2012 to 3.6% now, almost full employment. And you probably know the corporate profit is now the largest, and other things. But unfortunately, the most important economic factors or elements, such as consumption, investment, export, is very slow to this kind of stimulation. And that is a very difficult part of Japanese economy. So in spite of the fact that corporate profit is the largest now, the corporate sector is very reluctant to expand their the investment. In spite of the fact that the labor market is now very tight, and actually wages increasing. You probably heard a lot that although wages increasing, prices increase much more speedily, so we have a decrease of real wage. But if you look at the data very carefully, so-called nominal wage increase last year was the highest in the last 17 years. But unfortunately, last year we had a consumption tax increase, which just provided some add-on on the inflation rate. But it is very, I'm very confident this year, probably wage is increasing more than the price increase, so real wage is increasing. So I think the environment for consumer is in general very good, but still consumption is very weak. So this is a typical feature of Japanese economy. There's some part of the economy which is very quick to respond to the market, or in Japanese we say it's a neshiyasui bu분. But in the, and at the same time, there's some very important area which is very slow. So I think one of the very important aspects of the Abenomics from now on is how we can just have a quick transfer of the heat, which has already we achieved in corporate profitability or unemployment rate and other things, to more important consumption and investment and maybe export. So it is. Because of this, I think the government is now emphasizing the importance of wage increase. Japanese wage policy is very different maybe from ordinary countries, because we have a very formal meeting of the government and corporate leaders and labor unions to discuss about the increase of the wage. And they all think increasing wage is very important, not only because it just provides better income for consumer to just stimulate the consumption, but also constant increasing wage is a very important part of the stable, sustainable increasing prices. But this is not the first time. We had a very similar situation in 1979, if you remember well, in opposite directions. When we have a second oil crisis, we have a very serious possibility of serious inflation. At that time, what happened is just the government and labor union and the business committee discussed very seriously how we can just squeeze down the pace of wage increases. And that was actually a successful story for us to be able to just control inflation. Now we are doing a different thing, how we can just push up the wage so that we can have a more sustainable process of mild inflation, and also providing increased income to the consumers. So I think this is the most important. As you probably know, we have a shunto, or the wage negotiation in February and March. So we see whether the government is successful to achieve this or not. And naturally, the other thing is so-called growth strategy, the third law of Abenomics, because in order to just expand the investment, we need some kind of a reform. And again, here, corporate sector has a very large amount of profitability. They have a lot of profit, but still they are very reluctant to the investment. So we need some kind of change. But here we have to be very careful. If we read the content of the three laws of Abenomics, the third law is not growth strategies. Okay? The third law is growth strategies that promote private investment. Four words is added, that promote private investment, which is very important. So because when you're talking about growth strategy, you always have to think about two things, supply side policy and demand side policy. Now, both is very important. Without supply side policy, we cannot continue the sustainable growth forever. So labor reform is important, or the agricultural reform is very important, EPA is very important, and all reform is very important. But at the same time, we know supply side policy does not have a very immediate effect. Even if we are successful to reform agriculture sector today, we cannot expect the agriculture sector to become very competitive tomorrow. We have to wait the result for maybe 3 years, 5 years. So here, the importance of demand side. So there's a sequence of the Japanese economy. Now we first just stimulate the demand side by growth strategies, and at the same time try to speed up the process of supply side reform so that we can continue the growth. So if you cut the discussion of the growth strategy in the government, in the first year, whether you like or not, there's a lot of discussion about just the use of internet for the sale of pharmaceuticals. There's a lot of discussion about labor reforms, and there's a lot of discussion about the agricultural reform in the first year. These are very important. But this doesn't give us just very immediate effect. But if you just remember the discussion of growth strategy last years, there's more discussion about just corporate tax reductions. There's a lot of discussion about GPIF behavior change. There's a lot of discussion of the promotion of the tourists to Japan. And naturally, because this has a more implication of demand side influence. Now, corporate tax reduction is very important. Usually, corporate tax reduction is supply side element. But in the case of Japan, it has a very symbolic, because corporate tax reduction is used by the government as a leverage to just request the business community to increase wage. You probably remember Mr. Abe just mentioned in the first year, he just shortened the period of the corporate tax increase for the earthquake areas reconstruction fund. There's 1 year shortening of the corporate tax, so that natural corporate tax reduction, and he requested the corporate sector using this, tax deduction for the money for the increasing in the wage. And this year, you probably remember the originally in the last June, the government just had a commitment to just decrease the corporate tax rate about 6% in several years, which means about 5 years. But the first year, the government has already decided just decrease of 2.5%. So it's kind of the speeding up of process of reduction of the corporate tax. And that is also used as a leverage for requesting increasing wage for the negotiations. Anyway, so we have to look at just very carefully how this kind of just policies have a kind of a very important transmission influence from the heated part of the economy to the consumption, investment, and export. Now, I'm just going to talk a little bit about the fiscal reform, but because I have already used up 20 minutes, so if there's any question about fiscal reform, I'm always just prepared to respond to. But anyway, I'll stop here, and we want to have a Q&A. Thank you.
Okay. Thank you very much. Okay, I'd like to go to questions first from the working press. If you could keep it to one question and hopefully no speeches. So are there any questions from the working press? Anthony?
Anthony Rowley, Singapore Business Times. I agree with you that the exchange rate is very important, and for what it's worth, I personally think that the Bank of Japan is targeting the exchange rate, partly through its monetary policy, trying to keep it below 100 in order to stabilize it at a level where companies are confident that they will have a stable exchange rate. But what I want to ask you is a three-part question. One, assuming that extreme monetary easing continues, where do you think the yen might go to against the dollar in the next year or 2 years? Two, at what level do you think Japanese companies would begin to consider seriously making new investments in Japan? And three, what was the third part? I've forgotten now. Oh, well, those are the two main parts of my question. Okay. Oh, sorry, yes, I've just remembered. Japan obviously supplies an awful lot of intermediate goods to China, for instance, which are then re-exported from China. And with the yen weakening and the yuan, the renminbi increasing as it has been, is that likely to have a significant impact, do you think, on the level of Japanese exports to China and to other end product makers?
Well, first yen dollar exchange rate or yen exchange rate. At the university, I teach to my student. If you are just amateur, you just speak exchange rates in terms of nominal. But if you are the professional, you have to think about in real term. So because just, as I just emphasized, just the price is also very important when we are talking exchange rate. And if we just look at just the real exchange rate, yen is already very, very cheap in historical level. So there must be some point of time where yen is appreciating. But the question is that going to be tomorrow or 1 year or 3 years. And that's a difficult part. And sometime I had the opportunity to discuss this issue with my friend in Ministry of Finance. And he said a very interesting thing. Well, amateur, ordinary people just think exchange rate in terms of nominal exchange rate. And professionals have to think about in real exchange rate. But unfortunately, market is just dominated by the ordinary people, amateur. So what happened is now there are still kind of a mood for further weakening of yen because maybe tapering of the US monetary policies or very strong expansion of money by Bank of Japan, or maybe because of the increasing amount of the trade deficit. So it is not very easy. So I always just come back to the economic textbook say it's not possible to predict the exchange rate in the future. But what I want to say is in the midterm or in long term, yen must appreciate anyway. They cannot continue in this level. It's so low now. But unfortunately, market force just weakening and it's just shrinking so far. So we have to be very careful. Now, in new investment, whether it's going to abroad or in Japan, has a very strong now attention among government. And I understand government is now doing a lot of questionnaires or survey studies to just ask whether you are going to have increasing investment in Japan or just you are keeping investment abroad. And probably the answer depends on what kind of industry you're talking about. As I already mentioned, a company like Canon is very quick to come back to Japan because they are that kind of industry where there are a lot of robotics and there are a lot of machine and not much the workers. And so they have very easy to just moving across the borders. But a company like Toyota or Nissan is very, very slow because, as you know, the automobile, the location of production have to be very close to the location of the sales. And also they have a lot of commitment of just the expansion of the overseas production. So it's not very easy to imagine that they are coming back very soon. And there are many in-betweens. And so it's not easy, but there seems to be a kind of a tendency that the increasing number of Japanese companies is just increasing their share of investment in Japan and decreasing their share of investment in the overseas location, just because they just shifted to the overseas locations so much during the period of very high value. Now, third, the Japan-China trade is more complicated issue. Yes, certainly exchange rate is one aspect. But at the same time, as you probably know, there's a very visible, the decrease of Japanese investment in China and shifting to other part of Asia, maybe because of many reasons. So that kind of a shifting behavior of investment may be more important implication about just trade of intermediate product, and also the increasing labor cost in China, because China just has a very dramatic growth. So if you look at just the per capita GDP of China, it has already it's a very high level. It's just a kind of very important mechanism for the Japanese company to just thinking of the relocation of production. So, so I'm not sure whether the exchange rate has any visible influence on the intermediate trade. Okay.
Okay, thank you. Oh, go ahead.
Martin Kölling with the German business daily Handelsblatt. When you are opening European and American newspapers the last few months, you read about the death of Abenomics, the slow structural reforms, supposedly slow structural reforms. What is your impression? I mean, is this criticism justified? Is the government really slow and foot dragging on the real hard structural reforms? Are all the critics just misperceiving the reality? What is your position?
Well, we are so used to that kind of criticism for the last 50 years. Japan is always very slow for reform. It's a very common criticism from abroad. So this is not the first time. And maybe this time, because there was some kind of expectation rising in the first year of Abenomics, there's some kind of the repercussion that unfortunately the third arrow is very slow. And I think this kind of criticism is very well taken. I think we have to speed up the reform, of course. But at the same time, you have to just think very carefully several things. One is just even in the United States or Germany or France, or whichever country you take, the reform is not easy anyway. So you can't expect just a very difficult reform can be achieved in 1 year or in 2 years. So yes, acceleration of reform is very important, but you have to look at the reality. That's one thing. And second thing, I had already said, you have to always just distinguish between demand side and supply side. And one of the very important features in Japan, which is very different from other countries, is Japan suffered for many years from the lack of demand. And so that just lack of demand for many years after the crash of bubble just provided us the opportunity to just push up the economy for a while by demand side policies. I often talk to my students this kind of example. If you look at the department store, typical department store, having some shop clerks and product, and there are many customers, and so they have some kind of productivity. You can just calculate the productivity by dividing sales by, say, number of customers or whatever. But unfortunately, because of the crash of bubble, the number of customers coming to the department store become smaller and small. And that actually decreased the productivity of the department store. And that's what happened in Japanese economy after crash of bubble. If you look at just, say, total factor productivity of the Japanese economy, there's very sudden drop after the crash of bubble and stay very low for long period. You cannot explain this kind of behavior or productivity decrease by supply side policy. Now, coming back to the case of a department store, if you have a very lucky position to have this coming back of the customers again, then with same department store, with same shop clerks, you can increase the productivity for a while. But eventually, because you have to need a reform of the relocation, whatever. So I think in this period, Japan is a very, very critical position where demand side is so important for a while. Supply side is very important, of course. So we have to just speed up. But the demand side is the more important thing. And third thing, which I just think is very important, but I forgot to speak. Yeah, in the first year, June or July, Japanese government just announced the growth strategy for the first time. And that was not very popular. When Mr. Abe had a kind of a presentation on the growth strategies, at that particular day, stock price is decreasing. So many journalists and investors from the United States, Europe came to my office for discussion. And almost all these people say they are very disappointed by the growth strategy or reform of Japanese government. And so they have a very pessimistic picture of Japanese economy. So I said, you are now have some kind of misunderstanding. Japan is not North Korea, North Korea, if leaders say we are going to this direction, everybody is moving in that direction. But in the case of Japan, major player is not government. Major player is private sector. So even if the government policy is not very good, unfortunately, the private sector have to just do their own business. Of course, it is better if the government has better policies. So it is one of the reasons why Japanese government now start emphasizing profitability of corporate sector. I don't know what's the English. We call it a kaseguchikara, the power of profitability, which means how we can reform the corporate behaviors, corporate governance, or just how they can just increase their profitability. So I think that kind of private sector change is more important. In that respect, just the environment change I mentioned, very low real interest rate, or very large amount of the financial resources, which was not just moving very rapidly in last 10 years is a kind of very important stimulating process. So please look at just how the private sector is changing. If they don't, we don't have a very good future. But if they are moving, I hope the growth strategy will be more successful. Okay, thank you.
Okay. Are you working press?
Yes.
Okay. No, I mean, we usually go to regular working press first, and then if we have time, we expand it to other people.
I've been a working press person for quite a while. Elaine Kurtenbach with Associated Press. Thank you very much for your presentation, and I'm kind of following up from Martin's question, which is that I think part of the problem with the third arrow and the growth strategy is that it's very hard to grasp exactly what the directions are. There's hundreds of items in that growth strategy. I read them. It's a very long and complicated document. What areas do you feel we get the most bang for the buck in terms of reform, and what's the likelihood of them actually happening given the politics that surround so many of these issues?
I think it's a very good point. Yes, there must be some kind of concentration in certain critical area. And one of what I feel, I'm not just involved, by the way, I'm not involved in growth strategies because I'm the member of macroeconomic policy, but when I just watching from outside about the growth strategies, the kind of the behavior of the government is just setting, say, maybe 50s or 100 targeted, and looking at which one is most promising, or which is the most, moving. And so now I think there are several areas which I think are important. One is just the distribution of corporate profit to the economy. Wage increase is one aspect of the issue. And this is very complicated issue because, we are aging community, so we have a very rapidly shrinking working population. So we have a kind of issue of the wage issue at the same time of the labor shortage problem. So this is very supply side issues. And there's a lot of now discussions, and which of course related with the labor reform issues. And labor reform is very, very important. But unfortunately, labor reform is not a very easy thing. So rather than just having labor reform in front and to just trigger everything, probably it may be more reasonable to just having wage issues and labor shortage issues in the front, and then use that kind of a macroeconomic change for reform labor. That's one thing. And second is just corporate governance and the financial market. So it is very much related. Again, just remember, during deflations, everybody is just making saving in deposit. And because there's no place to lend money, banking sector just keep buying corporate bond, government bond. And this is just producing a so-called very stagnant position. Now, Bank of Japan, for good or for bad, just keeping buying a lot of government bond from the financial market. So the banking sector must find the place to just put their money on. So there's going to be a kind of changing behavior of the banking sectors. And at the same time, as I mentioned, just real interest rate is very low. That may be a very good opportunity for changing behavior of the people's portfolio investment or corporate investment behavior. And also the GPIF reform may be a very symbolic but very critical implication for the financial market and so forth. So this area, corporate governance or the increasing mobilization of the very large amount of fiscal financial asset is the second area. And third is, of course, labor reform. Now, labor reform in general is not easy, as I mentioned, but the increasing participation of the women in labor market has a kind of very, politically accepted agenda from the people, because we know we have to do anyway. And so by that kind of the reform, I hope there's going to be the agitation for labor market. And the fourth, this is just conditional. If United States is moving, TPP is going to be a very important driving force for reform. Once we start talking about TPP, that has very important implication for agriculture area and other reform. But here, because it's a negotiation, this is not just a Japan-only problem. Of course, Japan has to do a lot of effort to just realize the TPP negotiation. But this year, maybe, I hope this is also moving. So this is an area which I can think of. Yeah.
Oh, Elaine, sorry, I didn't mean any offense to you. It's just that we've had issues in terms of questioners who are not regular members, as well as other people. And so sometimes the regular members have not been able to get their questions in. So we've been trying to make sure that regular members can get their questions in before the associate members and also the other members of the club. Anyway, Jonathan.
Hi, I'm Jonathan Sobel from the New York Times. Could you address the time lag issue again? You said you were very confident that wages would increase more than prices this year. Could you tell us in a little more detail the basis for that confidence? And also address the counter-argument to the time lag view, which is that actually structural changes in the economy, like the shift of manufacturing overseas, the growing percentage of lower-paid part-time workers in the labor force, are actually maybe a more permanent and difficult to overcome barrier to that transmission. Thank you.
Well, the confidence may be partly a wishful expectation, but there are two reasons I think this year probably wage is catching up to the price. The one thing is just last year is very exceptional, as you probably know, because consumption tax rate is increased from 5 to 8%, which just have a kind of the push-up of consumption, consumer price index last year. But this year, we don't have any increase in consumption tax. So that just lower the price increase, say, now probably around 1% consumer price index. And the second thing is just the wage increase is becoming more attention in a policy among policy people. So not only just the government people, but even just the person like Mr. Sakakibara, the chairman of Keidanren, repeatedly just emphasized the importance of wage increase. And also, labor market is very tight, as you probably know. So not only just the fully employed workers, but also the part-time workers are now facing increasing wages. So if everything is just taking into account, there's a very good chance that we now have a wage is catching up to the price this year. But that is, anyway, partly my wish expectation, but at the same time, my predictions. Now, about the time lag, yes, there are some areas which is very difficult to just adjust very quickly, like allocation of the company abroad and domestic, or just adjustment of labor market. So the reason why I just mentioned the time lag is even in the area of the monetary policy, which you usually think in a very immediate influence has a time lag. So you have to be very careful for where we are standing. The point I want to say in my presentation is we must harvest the influence of monetary policy this year by very low real interest rate and hopefully increasing price and wages. And for other areas like a labor market you mentioned, of course the reform is not very easy. But one good news about labor market is, again, I want to emphasize shortage of labor. And shortage of labor is maybe the best medicine for reform because without increasing wage or without changing the business practice, it's not easy for the companies to just keep enough number of workers. Again, it depends on which area you are working. But the important thing is it's not just only construction area which is facing lack of labor. There are a lot of lack of workers in medicals or agricultural sectors, retail sectors, or services such as the haircut or the securities and many areas. So I think now the business people are now thinking very seriously how they can just change the labor management and how they can just increase labor productivity in order to survive the increasing labor costs. So I don't know whether I just answered to your question or not. Yes.
Okay, sorry, are you a regular member of Working Press? Okay, so we need to get to, I guess, if there are any other press members that want to ask questions. I guess Martin and then Anthony. And if you just keep it to one, since we have a fair number of people.
Very easy question. You mentioned that the corporate sector is most important for the success of anything, and Abenomics in particular. Looking at the corporate sector, how confident are you that they are really changing? I mean, they are basically caught between two, almost mutually exclusive goals. On the one hand, basically, there's a huge pressure, or was a huge pressure even on the medium-sized companies and small companies to globalize. At the same time, you have on the other hand, you have this goal to basically invest in Japan more than before. How can these companies basically balance these two conflicting goals? I think globalization is one of the toughest issues for Japanese companies in general terms. But if you want to succeed long term, you have to be on the overseas markets.
Well, one of the problem for Japanese corporate sector at this moment is they are very slow to respond to the environment change. There are many important change, but I just named three. One is globalization, more global competition. And second is just changing technology, ICT and so forth. And third is changing labor supply, shortage of labor supply in Japan. And unfortunately, Japanese corporation could not just respond very quickly, maybe partly because of deflation. Under deflation, the company is very reluctant to move forward. They just, very defensive behavior. So we have to see how they can just adjust the reality of globalization, technology, and shrinking labor supply in domestic market. And I don't know whether they're success or not. We have a lot of discussion. If we have an opportunity to just look at just the website of the METI, there's a very interesting meeting called the 日本の稼ぐ力 Source 研究会 in English, how we can just create the profitability of Japanese companies. And there's many, many interesting data and policy recommendations. Actually, I'm the chairman of that meeting anyway. But coming back to the globalization questions, we have to be very careful. There's a lot of now study by economists, the academic economists about globalization. Even in the United States, if you count the number of the American companies who are doing exporting, very small. Quite a large portion of the company is just selling in the domestic market. And if you count the number of the company going abroad for overseas operation, the number is much, much smaller. And this is realities. And same thing in Japan. So yes, for the company like Hitachi or Toyota, or for the company, big company supplying parts to this company, maybe globalization is very important. But it is very unrealistic for medium-sized companies or small companies just go abroad for the operation abroad. This is just not Japan-specific phenomena. In any countries, I think only big company has a kind of a capability going abroad. So I think the revitalization of the domestic market is also very important. But globalization, yes, you are right. So the company has a lot of now difficult adjustment, how they can just respond to globalization, but at the same time, how can then use domestic investment for revitalizing the Japanese economy. But because time is very limited, I hope you just come to the website of the METI for our meeting. Thank you.
Is that open, the meetings?
Meeting is open for the journalists, and also everything is just put on.
Oh.
It's very, very long, lengthy. data.
Okay.
Anyway.
Anthony.
I don't want to be too theoretical, but I wonder if you think inflation could quite suddenly take off in Japan. I mean, demand side, as you said, is soggy, but as I understand, the output gap is very small. So if a lot of emphasis is being put on pumping up the demand side, wages and so on, and if the supply side is slow to respond and the monetary policy is very easy, could inflation suddenly take off, do you think?
Yes, I think the demand-supply gap is very important. So I think probably if I am just, I'm not, but if I were a member of Bank of Japan, I looked very seriously about the demand-supply gap. But this year, as you know, there's other important factors like declining oil prices has a kind of a very short period influence on the downward direction of prices. So I'm not just very optimistic about very quick increase of price this year, especially the first part of this year, in spite of the fact the whether demand is increasing. But so far, I think probably the situation is not changing a lot about the price level. But I don't know about just the latter part of this year. There may be many other implications from demand-supply gap. Yes.
Okay, any other questions from the press? No, go ahead.
I'm Daniel Skenazi, freelance journalist. You spoke about the US, but the situation in Japan is that last year you lost 300,000 people in Japan. That is the difference between birth and death, actually. So there are 300,000 less people in Japan now. How do you want to achieve this growth, considering the fact that you want to promote women to go to work? So that means that perhaps there will be no more, not more children, actually, because it makes the life more difficult. So how do you want to achieve this growth, considering the fact that the demography is declining?
Yesterday, I spent just the whole day with my student to read Piketty's book, which is a very pessimistic picture of all countries, Europeans, American, and Japan and China, where demographic factor just mean declining working population, and per capita GDP growth is very similar to the value of the demographic number. If we believe that story, then there's nothing we can do unless we can increase the number of baby. But probably that is a discussion of the order of the one generation or 50 years or 100 years. And of course that is very important. That's the reason why we discuss very seriously about demographic factors. But what I'm talking today is something about just this year or 3 years or 5 years. And then probably macroeconomic factor is more important than that kind of demographic or long-term trending first. So, of course, we have to think both. And eventually, we have to think more seriously about how we can just increase labor force. Maybe immigration issue become a more heated issue eventually, I don't know. Or the participation of the women, increasing participation of women in working force, or increasing participation of the aged people in labor market, maybe it's a kind of a discussion point. But so far, I think that is not just an issue just we are facing now. So that's the reason why I just maybe emphasize, maybe overemphasize the importance of demand side for a while. Japan, I want to repeat, we suffered a lot for the lack of demand for 20 years. And that suffering is providing us some opportunity to just have a kind of the other side of the demand side, supply side relation for several years. And that is probably, according to my understanding, one of the very important aspects of the Abenomics. So supply side is very important, the demography is very important, everything is very important. But you have to just think very carefully what kind of time dimension you are talking about, I think. That's my response to your questions. Yeah.
Okay. Please.
I'm one of the associate members. Kiyoshi Inoue is my name. First of all, I appreciate Professor Ito's very clear-cut and easily understandable explanation of current economic situation, featuring what you call three yasu, san yasu, cheap interest rate, cheap Japanese yen, and cheap oil price, which is good. Now, here I'm a little bit focusing on cheap interest rate. We have now a minus interest rate, but I'm a little bit worried, anxious or worried how this cheap interest situation does affect enoughly on corporate side and household side. I'm not worried. I'm more worried about the household side. Corporate side, as the professor mentioned, government is now putting a pressure on the corporate side to make a more investment, making use of this minus interest situation or exchange rate situation. This is fine. Household side, you making use of your number, 16 trillion US dollars, huge, huge amount of money is sleeping. And if I can say, based on my prejudice, of course, a very few billionaires put the money outside or putting the money in risk-taking investment. But normal people, especially aged persons, doesn't know about this minus interest situation. And on the other hand, intermediary institutions, especially Japanese, for me, they don't offer good investment opportunities or understandable opportunities to those ordinary people. Huge amount of money is sleeping in even a closet without any interest rate in this minus interest situation. You really believe this huge amount of money in a household move into more risk-taking investment? Of course, I don't hurry about it as foreigners. We Japanese are very patient, but say 3 or 5 or 10 years, this tendency does really change? You think so? I have been waiting actually 25 years ago, but no opportunity for me.
Oh, okay. Sorry. So basically, your question is whether you think that more households will put their assets into risk assets, right? Yes. Okay.
If you are familiar with just the history of the household behavior of their portfolio in the long run, you may be surprised. Japanese household sector is very, very smart. We had experience of crash of bubble just in the beginning of 1990s. And there's very careful studies. Who is losing? Who is gaining? Do you know? Losing is the corporate sectors. Corporate sectors buy huge amount of very expensive real estate, and they have to sell in a very low price. You can remember a company like a Daiei or some construction companies. Now, because there are many household sectors which suffer from capital loss, but increasing, surprisingly, a large number of the Japanese household sector just to sell the real estate when it's very expensive and cheap. So I think the ordinary people is very sensitive. Just remember the very serious inflation in 1973, in the first oil crisis. As you probably remember, consumer price index increased 23.2%. Almost the quarter of the asset was lost by inflation. And after that, after that kind of very serious inflation, Japanese consumer become very sensitive to the inflation. So the crash of bubble just provide a very important environment of deflation and stagnant economy where putting money on deposit is the best way. And so that is what we now see. But question is whether they are keeping the same behavior from now on. If inflation rate is 2% every year, and that means just your nominal asset has losing 2% every year. If you keep 10 years, you are losing about a quarter of the asset. So I don't know. We have to just watch carefully. But I want to say, just Japanese ordinary people is not just very silly. They are very, very smart to the situation. And second thing is, not only just consumers, but the only magnitude. I'm not saying all money is just moving from deposits to just to the stock or the mutual fund. You probably know more than 50% of the people's saving is now in deposit or similar things. If 10% is moving from that kind of very conservative to the more aggressive one, which means $1.6 trillion, a huge amount. So the magnitude of change is not just very drastic change, it's just the magnitude change. Also, very old people may be very conservative, they cannot decide. But just remember, they are going to the other world anyway, very soon. And the money is actually coming down to the next generation, okay? So you have to think very seriously. If we are thinking about just not very immediate, but for the next 3 or 4 years, there's going to be a lot of reshuffling. And finally, banking sector, as I already emphasized. In the past 10 years or 20 years, banking sector is just accepting deposit and putting that money on government bond. By that way, they have a very stable, very minor, small, but profit. But because Bank of Japan is buying most of the government debt, so the Bank of Japan must, banking sector in Japan must find somewhere else to put their money. Otherwise, they can just get profit. And also, as you know, the corporate government bond interest rate is now very, very low. It's very difficult to just generate a profit by shifting deposit money to the government bond. So this also may be another driving force for changing portfolio behavior in Japanese household sectors. But I don't know. We have to see whether Japanese people are not moving or not. I hope it is moving, yes.
Do you have time for one more question?
Oh, yes. Sure.
Okay. No, go ahead.
My name is Gerhard Faswell. I'm honorary member here. I heard your very excellent talk also in Kyoto last week at the Kyoto Bank.
Oh.
And after you, it was Japanese. In Japanese. And after you, there was Mr. Sakakibara who was talking. Huh? Yeah. And do you remember his view graph where he showed that every other country, every other major country is growing, and Japan is not growing economically.
Nominally.
Yeah. And I have a friend whose name is Hoshi, Takeo Hoshi. I'm sure you know him. And he spent a lot of time trying to interpret this. And what he was saying is, his interpretation is that he says that Japan had very high growth until Japan caught up with the advanced Western countries. And as soon as Japan wasn't catching up anymore, but as soon as Japan's richness has reached the Western world, you know, it stopped growing and it hasn't started anymore. And so another point to that is, like, I worked at Hitachi a while, and when I worked at Hitachi, all the Hitachi people wanted to catch up IBM. So Hitachi's business model was not Hitachi's business model, but their business model was to be like IBM. And today, so I think you or Sakakibara-sensei on Friday mentioned also Hitachi today, they want to be like Siemens. I think you mentioned on Friday. So what's your take on this? What's your impression, your interpretation to this catch-up question?
Well, I think the catch-up theory is just the very essence of the Piketty's discussions. When you look at just any countries in the history who are in the frontier of the technology, the country cannot continue very high growth. Only when you are catching up, you are just having very rapid growth. Like European countries, Germany and France from 1945 to 1975, when they have a lot of destruction during war, so they have opportunity to just catch up. Or Japan in 1960s and 70s, or maybe China now. So if that story is correct, we don't have a very good expectation that we can just expand very rapidly. But the Mr. Sakakibara's picture, you have to remember that is not real, it's nominal. One of the problems in Japan is nominal GDP is declining because we have a minus inflation rate. So if we just change nominal increase, then everything is generally very different. Although we didn't discuss much about the fiscal consolidation, nominal is very important. About real side, we don't know. But as an economist, I personally hope that there's some way to increase the real growth rate from 0.5% to 1.5%. I'm not talking about just 3% or 5% in growth. We have to just continue 1.5% or 2% increase. And if we can, then there's going to be a lot of difference. And Mr. Piketty is also very careful. Also, he's very pessimistic about the growth rate of the frontier countries. But still, he just allows for the possibilities at 1.5% increase. And so that is the kind of range. So if we have a 1.5% increase in real term, which is a lot of achievement, and if we have a 2% inflation rate in consumer price index, which means 1% GDP deflators, we may be able to just achieve 2.5% increase. That is, I think, the target, immediate target for the Abenomics. So that is my answer to your question.
Okay. I think we've run out of time. Anyway, I'd like to thank you again for your speech and answering all the different questions. And as is our regular tradition, we would like to give you an honorary membership, and hopefully we will see you here over the next year. Thank you.
Thank you. Thank you. Thank you.